G'day folks, welcome back to another update for a currency. Today we're looking at the Aussie New Zealand dollars and we're going to be including some back testing. Now also the positions for this chart are still in a bullish momentum, so bullish or long trades to be taken only. And don't forget to reference the +1 videos. That's where we look at some various strategies, and today we're looking at the CCI 14 strategy. And hit that like and subscribe button, that'd be greatly appreciated. So let's get stuck into the chart. So on the weekly chart, first off, you can see the price has been very bullish now since about July this year. Both the price and the CCI well above the moving averages. That's a nice big bull run, and that means if you're trading on the daily, go in the direction of the weekly. So and there's no divergence that I can see at the moment on the weekly. On the daily, likewise, nice big bull run. No divergence as well, although there might be possibly one. No, that's already broken higher, so that's already a non-event. So again, bullish momentum on the daily as well, with the price above moving averages. And the CCI is actually above the moving average, but notice it's tightening. So we might have a bit of a consolidation period, possibly. Just be careful, but yeah, still bullish momentum overall. Notice back here we had a consolidation as well on the CCI, and the price sort of went sideways for a while before finally breaking to the upside. That's the daily. Again, no diversion there. So on the 1 hour chart, again, first thing we look for is any diversion, and there's no diversion there. That CCI is moving in line with the price, so that's consistency. The last diversion we had was back here, lower highs on the CCI versus higher highs on the price, and that fell off. If you draw a Fibonacci in that little range there, that easily broke down to just past the 61% level. So that was the last divergence we had on the 1 hour chart. And again, since then, the CCI has been moving in line with the price. Now, looking at the back test, again, what I've got here is the daily chart. So what we do here is we go back right to the very beginning there. That was started back here. So what we've done here is during that period when the price and the moving average was in an ascending mode above the moving averages, you would have taken long positions and you would have closed out your position there, and that was equivalent to that area there on the daily, and that there was equivalent to that area there on the 1 hour. So you would not have taken any of those trades there because that was below the moving average on the daily chart. We're using the daily in terms of our trend. We'll let the 1 hour run its course. So let's look at these drawdowns. Each of these steps indicates the number of contracts entered. We average down. So that one there, for example, you can see there that period there when that started was at this point here, so you would not have entered a long position, so you would have avoided that drawdown. Let's move forward to this one here. That one there was in a bit of a drawdown, but again, notice there you would have gone long somewhere probably in this area, and that area there was equivalent to this point here. Let's put an arrow there. So that's where you would have started going long, so you would have had those little trades, and you would have closed it out at the very beginning of that. You might have had one contract open, and you would have closed it out at that point, and you would have avoided that drawdown. Likewise, you would have let it bull run there. I won't mark all of them, and again, closing it out there on that one. So you would have closed it out there, and next one you would have bought. So you would have avoided that drawdown, and you would have gone long again at that point. So that's basically it. And at the moment, the last entries would have been at this point. It's a bit of a drawdown there. Let's see what that would have done on the daily. You can see there it came close to the moving average point at that point, rose a bit, and then it finally closed into that moving average range at this point. And since then, it's actually broken above, and you'd be taking a couple of trades now. So again, to avoid these drawdowns, always go in the direction of the daily trend. If you enjoy the content, subscribe at least on a free trial to my Patreon page where I publish weekly bullish shares across regions of the world's markets. Thanks, and talk to you in our next video.